Hi everyone, hope you're all doing well. Today we'll talk about the mad week in the stock market. Earnings season is officially underway. We've had the banks last week, which was a bit of a mixed bag, but we move on to some of the more individual stocks from the big tech in the next few weeks, and then obviously in a couple of weeks after that we'll get some of the smaller caps. So there's a very interesting time happening right now in the stock market, especially right now when we've seen so much negativity priced in. Are these companies now going to come out and say, actually, it's not actually that bad, or it's not getting any worse, or one of the key things would be if it's getting even worse, that would obviously be a big thing. There's a lot of key things to be looking out for right now. We're going to go through some of the things to keep an eye on for this week. Two little things three things I want to speak about actually before I get onto the video. First one being, thank you for you guys on Instagram that have been reporting the fake account that's out there. Unfortunately, from what I've reported to Instagram, apparently there's not enough evidence to prove it's a fake account and they can't remove it. So I think maybe just the more reports on it might help. But just be careful of that because it is going around and following everyone. Second thing is the reaction to yesterday's video saying that I weren't doing the weekly buy updates anymore and doing it in a monthly point of view. There was a lot of negativity out for that video. I was actually really surprised to see the amount of negativity that was there, but I guess we're in a bear market, and generally there's a lot of negative people that are quite emotional now in a negative market. And the last point being the stock market today. We've had, look at this, I'm recording this right now at around about just as it's opened. Pretty strong open here, which is quite surprising to see. I thought we would see a little bit of a sell-off and a little bit of the risk taken off the table before we start heading into earnings season, but there's a little bit of buy-in at the moment, which is obviously a positive sign. We've been consolidating for the last few weeks, and now we're just actually starting to tick upwards slightly, which is actually quite positive. I've got to say though, I was just thinking this earlier, I cannot wait for the stock market to start turning around now and move into like the positive direction. We've had the crash, we've had the test of mentality, who has the kind of toughness to make it through the other side, and now we've had the big buying opportunities, and obviously it'd be great for the buying opportunities to stick around here for a bit longer and to buy them dips, but it'd be so good to I can't wait to see them rewards come in from buying the dip, and the rally that we have in the next few years. I mean, I was thinking earlier, like the rise, I was actually potentially making a video on this, but like the rise of the toxic YouTube channels, like the toxic stock market and finance channels that has been out there, it's just been unbelievable. And as well as the negativity in the comment section, like for me personally, like the amount of abuse that I've had in the comment section in the last few months while we've been going through this negative market, obviously funny enough, like it wasn't like that when we're in a bull market and it happens to be in a bear market. It'd be interesting to see what negativity we're in when we have this bull market, and if that kind of carries on happening, or if it suddenly disappears when the stocks start going up. So interesting time anyway. A little bit off topic there. Let's get on to these earnings season, because it is a big week in the earnings season. So here we go. The first kind of big week in earnings season. Monday, Bank of America, Goldman Sachs, had all these already, a couple more banks. After the close, IBM, a few people might play that as a dividend stock. Tuesday starts to get a little bit more bigger. We've got the likes of Johnson & Johnson, one of the dividend kings out there. Lockheed Martin, again, quite an interesting one. I think they could actually do quite well, potentially, with a lot of the political things that have happened in the last 12 months. I think they could be on for I think some of it might have been priced in, but I think they could be in it for an interesting few years. Hasbro, a few people might follow that. Ali, a few people might follow that. After the close, this is where we start to get onto some big ones here. Interactive Brokers, some of you guys might follow that one, but this one, Netflix, this is a big one. This is probably the first one that I'm really looking forward to on Tuesday. I don't own it. I'm just really interested to see what they come out with, because if you look at Netflix, this stock is priced at really low valuations now, historically really low valuations. You look at here, I need to go further back. Forget 5 years. We're going even further back than 5 years. We're going on Max Chart on Google. The last time Netflix was this sort of valuation was around 2017. That's correct. Nearly 5 years, over 5 years of share price appreciation wiped out for Netflix. Trading at 17 times earnings. Never seen that with Netflix. One of the gems of the stock market. Boom, absolutely slaughtered in this last few months. And for me, I look at Netflix now and look at what's priced in. I mean, I was even tempted at Netflix. I was looking at Netflix at 17 times earnings going, I was even thinking, if it could go even lower. I think at one point it was like 14 times earnings. I was like, it's not actually that bad at all. And there's a lot of negativity priced in with Netflix here, and it'd be interesting to see what their situation, whether they surprise people or if it is getting worse. And the thing that people always forget right now, and this is the prime thing that happens in the bear market, is like Netflix earnings. Look at this, right? Netflix earnings preview. Wall Street expects subscriber drop and detail about its ad ambitions. This is the key headline. Wall Street expects subscriber drop. So if Netflix come out and say that subscribers have dropped here, it's expected. You know, this is what the thing is people look at a stock like Netflix and go, yeah, it's a terrible stock. Look, it's, you know, everything's going wrong with the business. And people look at that and look at the share price and they think, yeah, it's a terrible business. Rather than looking, okay, this drop here has already priced in that Netflix is currently dropping subscribers. What isn't priced in is what the future potential of Netflix is. Because from this point here, if this subscriber drop keeps getting worse by quarter, that leads to profit declining, revenue declining. Obviously, Netflix is going to go lower from here. But the other opportunity to be looking at this is going Netflix 17 times earnings. Sure, there's going to be a drop in Netflix subscriber from here, but can they bounce back? Can they make more monetization from the subscribers? Can they, you know, get that subscriber growth back up in the right direction? You know, can they potentially make more income from the users from increasing prices or attracting users through the ad subscription? And this is one of the worst errors to make in the bear market, is looking at that and going, that's a terrible company, rather than going, okay, it's in a bad position right now, but actually is it going to get worse, so I want to avoid this stock, or is this actually an opportunity to buy and this could potentially be a good investment? And I think Netflix is quite one of those stocks that you would have to actually have a little bit of a sit back and go, actually this could actually be worth something. This could be a potential really golden opportunity here in a stock that we've not had really ever in the last 5 years. And like I said, you know, you've got to look at this negativity and what's, you know, priced in here. And this is what I'm really looking forward to Netflix. I'm really looking forward to Netflix and them kind of going, yeah, it's actually getting a lot worse, and that would actually be quite worrying. Or Netflix actually come out and go, yeah, you know, we did drop subscribers, but it actually wasn't as bad as what we were expecting. That would actually be the really interesting point. And if you kind of had the bravery to kind of look at that opportunity and, you know, you thought that opportunity would work out, you know, if that happens on Tuesday, you'll actually probably see the first part of some kind of rewards coming in for that. So yeah, I'm really looking forward to Netflix as a neutral. And an interesting fact, I actually think Netflix is historically the most volatile stock in earnings season, so we will expect a move from them. So yeah, that's the Tuesday. Wednesday, not too much on the open that I'm interested in. On the close, same again, not too much. Maybe United, see how they're doing with a lot of the issues out here with what's going on in the travel world. But Tesla are reporting earnings, which they're actually they historically have been on Mondays, but they've flipped to a Wednesday now. So Tesla's going to be an interesting one. Tesla, I'm very much on the fence with. I think that in the long term, Tesla's going to do very well. And obviously, I have been a shareholder previously of Tesla, making very good amounts of profit. People always forget that. Collectively over 400% return in Tesla, which has been absolutely amazing. But hey, people only remember your losses when you're in the bear market, but let's not forget that, eh? Tesla, an interesting one. It's been having a bit of a drop at the moment, as you can see. 100 times earnings, which actually isn't terrible for a growth stock with Tesla, with the potential, the profit growth, the revenue growth. I mean, I still don't know if it's priced a little high for me personally. I always said that if it could get to the 500 range, that's where I'd be very much interested in. And it was kind of getting close there at one point. You can see here, you know, it started touching that $600. Actually, 52 close was $620. So yeah, maybe Tesla was one that I could potentially have bought. I don't know. I just think it is still a little bit of a high valuation. And with a 774 billion market cap, I feel like they still have to execute very well to kind of justify that valuation, which I think they will do. I just think that I like to have a little bit more on my side on the valuation for me to take that on, I'd guess. But yeah, with Tesla, this will be very interesting. We know they've been having a few issues at the moment. We'll see if that affects the company or if they're still putting stellar results. So yeah, be interesting one. I think this potentially could have a bit of a move. We'll see what happens there. So I'll keep an eye on that one, because like I said, if it does present me with the chance of a big drop, you know, it won't be ridiculous for a company like Tesla to move, you know, 10% off earnings or even up to 20%. You know, if you move 20% in the downside, obviously that would be, you know, create a fantastic opportunity. Same way it could potentially move in that upwards trend as well. So we'll see what happens. So yeah, I'm keeping an eye on that one. The next one. On Thursday, AT&T, a few guys hold that as a dividend stock. American Airlines, Nokia, I know a few people play that one as a bit of a turnaround play. Domino's, Philip Morris. On Thursday after close though, I mean, you got Capital One, Boston Beer, I know a few people are interested in that one. That's been really beaten down. But Snapchat, this is going to be a key one because this is actually going to move 3 of my stocks. Those 3 stocks that are going to move off the Pinterest, the Snapchat numbers are Pinterest, kind of said one there, Meta or Facebook, and potentially we could see Google move a little bit off these numbers. So yeah, with Snapchat, this is quite a volatile one as well. I'm not really a big fan of Snapchat. I'm not a believer in the product as much in the long term and the monetization as a Pinterest and a Meta. This stock though has been very much same again. This has been beaten down. We already know they've come out, I think it was a few weeks ago, saying that they're not going to meet Q2 numbers. So that's already priced into the stock. So don't expect much reaction off the actual Q2 earnings. What's going to be key for Snapchat is what they come out for with Q3 guidance. Q3 guidance will be key because this will be the first company that they're getting the data through for July, and it'll be interesting in that July data to see kind of, okay, is monetization, how is that doing? What are monthly active users doing? Are they still sticking around? So that is very key to be watching out for. So yeah, with Snapchat, once again, you know, we already have priced in here a bit of a drop off. The key thing is the guidance and what's happening in this latest month. So yeah, what's the situation? Is it getting much worse? Is it getting better? And whatever guidance that Snapchat will give will then obviously move Pinterest and also Meta, but potentially we could even see this on Google. So that's a key one to be looking out for if you do own any of them stocks. So yeah, that's Snapchat. So overall, a very interesting week. Definitely a few to be keeping an eye on. Obviously, Netflix, Tesla, and Snapchat are my 3 key ones going into this week. Next week as well is another busy one. We've got like a lot of the big tech coming in. It's a very busy week. Next week we've got like, you know, like some Meta, Google, and Apple, and everyone like that, for example. So yeah, it's a busy time. We're back to listening to quite a few conference calls on the night time. So hope you enjoyed this little preview anyway, guys, and I'll see you tomorrow on that video. See you in a bit, guys.